Hi fellow traders. In this video, I'm going to share with you how I identify my levels of support and resistance and how I add them to my charts and how I use them in planning my trades. I did a blog on this last week and a handful of you asked me to do a video to demonstrate how I do it. So I'm going to attempt to do that in this video. But before I do, I want to share with you that the way I do things, it may be a little different than a lot of the gurus do it or how they teach it. And I'm not saying that they're wrong, they're smarter, they know more than I do, but I've adapted this way to, fit my strategy, my eye, and my style of trading. As a teacher, I learned early on that there was no right or wrong way to teach, that teaching was an art form, and that I had to bring my personality. And then I needed to continue to learn and develop strategies to enhance my teaching skills and to enhance my student engagement. I needed to continue to evolve as a teacher, every year. It's a constantly ever changing process. The students in my class changed every year, so my teaching style and how I approached them had to change every year. So that ideology translated over or transferred into my trading, because as I got into trading, I realized trading is not an exact science. If it was, everybody would be rich because everything would be the same. There wouldn't be any variables or anything like that. So I realized just like the kids changed in my class every year, and I had to adapt and enhance my skills, I had to do the same thing in trading. So that's why some of the things I do may not be mainstream, or they may be unique to me, but I feel that that is a big part of my success, is being able to do that. So just keep that in mind as we go through my charts and stuff. Now, okay, this is a chart on VBLT. It was on my watch today, one of the stocks that I looked at, and you can see these are the daily levels that I found on the daily chart, which are these green lines here, green dashed lines. Then you've got the VWAP and all the moving averages and the upper and lower deviation bands in between. But just quickly, you can see how this ticker, failed to push this resistance and, came down. It chopped around a lot, which is why I didn't trade it initially, but, you know, it faded and then kind of bounced on this support. It touched the support here. It still started coming down and kind of hung around here before it lost it, and then it faded again. But you can see the importance of these two levels. But let me get into what I wanted to show you. Let me find a ticker that I haven't traded before. It's probably got another clean chart. Yeah, here we go. And let's go to the clean charts. All right. This is when I first started trading, this is how my charts look. If you followed me when I first started my blog, my charts were this clean. No levels of support and resistance, no VWAP, no moving averages, nothing. And I traded mainly on candle formation. Yeah, I look for ABCD patterns and Gearing and Perkin and all of that stuff. I looked at all of that, but what I really looked at, and what I wanted this, another thing I want to say is looking at this chart, there's no way I could determine whether a stock's going to go up or down. All I looked for was if it washed out in the morning to try to figure out where it was going to bounce so that I can catch it to the long side, because I was a long bias trader. All I want to do is long stocks. And when I looked at this, I would look for a candle to make a higher low to go long. So, a higher high. Like this candle printed, I might have gone long and then, waited till one made a new low and get out. Now, eventually I started shorting and I could short this, long this, short this. When this made a new low, short it. This made a new high, get out, long it. I mean, I could trade 20 times a day. And that just wasn't feasible. Now, when I was doing this, it was a volatile market. And in a volatile market, it can make dumb people look smart. And that's just what it did. It made me look smart and like I knew what I was doing. I had a strategy that worked, but this wasn't one that could stand the test of time. Because as soon as the market slowed down and these tickers stopped moving the way they were, I was kind of dead in the water. And that's when I ended up watching a video on Ross did a webinar, Think Through Trade Ideas at eSignal, and one of the strategies that he taught on that was a bottom reversal. Beautiful. I love longs. I love playing bounces. Now that I know that if I could find support, I can have a better idea of where that ticker is going to bounce off of. So, that was the first thing that I did. Well, actually, the first study I put on here was the previous day's close. And it's something that I had to build in Thinkorswim. It doesn't actually just come with it. So that's what this white line is. This is yesterday's close. And this sometimes does act as support and resistance. In this case here, you can kind of see it acted as resistance. It kind of came up trying to go red to green on the day, but it couldn't, and it faded back down. The next thing I looked at was trying to identify daily support and resistance. And it's just a matter of pulling up the daily chart, seeing if you can line up the support and resistance from the daily with the intraday chart. And whenever you can line those two charts up, you're going to have a more predictable and more powerful move. So in this case, I start looking for where the stock bottomed out and then started to reverse. So here, let's see this candle, the low was 58.74. Okay, 58.71, that's close enough. I'm not going to be able to get it to the penny, but if it's within 5 cents or so, it's going to give me a good indication of where support and resistance is. Plus, in trading, nothing's going to be exact anyway. It's going to hit within a couple of cents regardless. So, I wouldn't worry about trying to get it to the exact penny. All right, here, this one, see 60.31, 60.27, that's close enough. And then you can see here where you had one candle here, two candles, one here. Then I like to look back. Here it acted as resistance for these candles here before it was able to pop and continue to move back up. So I like so that's what I do is I'll start here and then try to go back and I'll start here trying to find support and resistance, and then I'll move back to the to these over here. Now this is close enough, so I'm not gonna this is close enough to this level, so a lot of times I wouldn't draw it, but I'm just gonna do it in this case. Low 61.85. Let me go up one more tick. Oops. Okay, 82 is close enough. So I think I found all of the levels here. Let me get this one. Low on this candle, 56.40. Go up 56.38 is as close as it's going to get. If I can get it, there it is. So what I'm doing is looking for dips, and then I'm looking for peaks, where it peaked out and started to go back the other way. See high on this, 64.89. And you'll see on some where you'll find sometimes the dips and the peaks line up where you have support one place and resistance the other place. But what I like to do is mark out these areas. Some people say it's overkill, but let's go to the 5-minute chart and let's see what it looks like. Looks pretty close to me. And there's no way of me knowing this. I did it from the daily first and then brought it over here to the 5-minute. I didn't do it from the 5-minute and go to the daily. So you can see how daily support and resistance lines up and plays a big part in how the ticker trades during the day. You see this area of support right here yesterday. It wasn't a factor today because it blew through it. But yesterday this held their support. Yesterday this held their support here into close. Today it acted as resistance here and here. The second time it tried to break through, this is a perfect example of where you can get a good short. It tried to break through here, it came back. This is where you can get short with very good risk. Risking on this, get short here. This could have been your first profit target. And had I taken this trade, half would have come off here. And, I'd have been holding the other half for down here. But you can see how powerful and how important these levels from the daily chart can be. It could be very important to, find these levels. All right, the next thing I did, and this was like an evolution for me, because I started with nothing. I learned candlesticks, and I became proficient at candlesticks. Then I learned how to find support and resistance. And I feel I've become proficient with support and resistance. And you see all of those lines I drew, a lot of people would say, oh man, that's overkill. Well, you can see right here that it lines up perfectly with it. And the next thing I did, I learned when I got into the Day Trade Warrior chat was how to use a VWAP. They would talk about the VWAP all the time. And then Mike, one of the moderators, came in and did a webinar in chat on that. And that's all it took. Once I learned and I saw the VWAP, then I started adapting it to, my trading style. So let's add the VWAP on here. Okay, add study. It's a market strength study. Add the VWAP. Okay, this purple line is a VWAP, volume weighted average price. And this acts as support and resistance intraday as well. And this is a pretty strong indicator of how strong or how weak a stock is or is going to be. This is the upper deviation band and this is the lower deviation band. Now these are important to me because in the absence of clear daily chart resistance and support, these become my profit targets. If I'm taking it off the VWAP long, this is my profit target. If I'm going short, this is my profit target. And it works perfectly. Every now and then I'll get something to blow through it and continue to move down, or blow through it and continue to move up. But that's my plan. That's my profit target. I take profits there. And if I get another entry with it moving up, I'll take it and look for another spot. But the VWAP became very important to me because, like I said, I like reversals. And I would take reversals off support. And my first profit target was going to be the VWAP. And then if it held the VWAP and moved up, my next profit target was going to be the upper deviation band. And when the market was, somewhat still volatile and giving us these strong moves before the summer, it worked. I could trade a reversal to the VWAP and then trade it off the VWAP up to the upper deviation band. And then oftentimes on a reversal, I use the lower deviation band, as support because, these are areas of support and resistance. These can act just like the daily chart support and resistance. These can work the same. So now I got into, okay, how can I manage this trade? Okay, how am I going to manage this? I'm in this trade, so how am I going to know to get out? When am I going to know to stop out? Like right here, my old way of thinking, this made a new high, I'm stopped out. I'm done. So I missed this move because you can't really get in this trade. Look at the candles. How are you going to get in this trade? It's going to throw you out. So I learned something else. I started using the 9, let's see, add study, the 9 exponential moving average. And if you look at this, perfect example. I've never seen this stock. This isn't anything I've even traded. But look at the 9. This is my moving resistance line. So when I get in a trade, if it works, the 9 becomes my stop. Any close above it, and it has to close above it because there are algos and there are institutional traders that trade off the 9. I mean, I know it for a fact because I've seen tickers pop up to the 9. You have a nice wick up 20-30 cents taking out stop orders. And anytime this 9 crosses the VWAP, a lot of times you get a lot of, some powerful moves down. So you've got double the amount of volume here. I mean, it's just what I've noticed. But this 9 becomes a very important piece to my puzzle. And likewise to the upside, like right here. If you look how this acted as support, I would have stayed in this trade long until this candle broke the 9 or it hit my profit target. So say I was taking this long off of VWAP. This is a perfect VWAP setup. Perfect setup that I would take off the VWAP. The 9 is moving up. These candles are trading above the 9. And once the trade works, this is my moving support. Once this moving support breaks or fails, I'm out of the trade. I'm going to take my profit. It's a profitable trade. So that's another area of support and resistance that I use, or another indicator that I use in my trading. Now I do have the 20. Let me add that real quick. Let's see, moving averages, exponential. I do use the 20 moving average. So if you see my charts, you're going to see these moving averages on here. And I also have the 50. And let me add that so we can see, how that affected the chart today. But the 50 is going to be the simple moving average. Let's see, this is it right here. So the 50 is going to be, edit, it's simple, and then I use the 200. And then I'll use the 200 moving average too on my daily. The 50 and the 200 I really use on my daily. But you can see at some points that 50 does, act as, right here, acted as resistance. Right here, support right here. So, I mean, moving averages are important. A lot of people just discount them or dismiss them. For me, moving averages are very important. I can't believe I traded without them for so long. I can't believe I made money trading without them for so long. But like I said, in a volatile market, you know, anybody can make money. And luckily, I started this and the market was volatile and I was able to make some money and not really lose it all, um, while I was learning this stuff. Very thankful. And that's another reason why I like to share the information that I do share. Um, Obviously, I can't give, everything and give a whole lot of one-on-one instruction, but I can share the things that I've learned, and share how I use them. For some people, that makes sense if it fits your eye. It'll be great if you can adapt it to your style. But like I said, for some people, this may not make sense. It may not even be anything they want to get involved in. Just depends on you. Depends on your style. Whether it fits the type trading that you want to get into. Um, if you want to contact me about anything, um, you can see my blog. Like I said, I did a blog on this last week. That's my email, averagejoetrader@gmail.com, or you can hit me up on Twitter. I'm there, and I've talked to a bunch of traders. I've Skyped with them on Sundays. When I usually do my studying, I've shared my charts. I've kind of showed them, the same thing. So if you have any more questions or you want to go over this a little bit more, just hit me up. I'll be happy to, help you any way I can. I believe in, you must first enrich yourself. I mean, you must first enrich others before yourself can be enriched. So, that's why I do the things that I do. But I hope this video helped. Um, and I hope everybody has a great weekend. I know I'm going to relax tomorrow and then get back studying on Sunday. So until next time, everybody have a great weekend and have a great week next week.